And we are back. We are now going to move on to the housewares division, and we are going to calculate that division's ROA margin and turnover across years 1 and year 2. So we have the same information. Houseware in year 1 had total sales of $12 million. Their operating income ended up being $600,000 out of that, and their average assets were $5 million. In year 2, they had a little bit more sales, $12.5 million, a little bit lower operating income, same assets, $5 million. All right, so let's calculate the return. All right, so for year 1, we have their operating income of $600,000, and we divide that by our assets of $5 million. And that is going to give us 12% ROI. That's not bad. I would invest in something that paid me 12%. Year 2, our operating income was $500,000, and our assets were that same $5 million. I guess they didn't get any new assets. So that's going to give us a return on investment of 10%. So it went down a little bit, right? Our assets stayed the same. When our operating income goes down, our return went down. So that's not good. That's not the right direction. We don't really want to see that. Let's go on and look at the margin. So we have that same $600,000 in operating income divided by our $12 million in sales. And that gives us a margin of 5%. And we have our 500 in year 2, 500 in sale divided by, in operating income divided by 12.5 in sales. So that is equal to 4%. Our margin's going down. How about asset turnover? So the assets were the same. $12 million in sales, $12,500,000 in sales divided by our assets, which are $5 million for both, and 2.4 and 2.5. All right, so there's your housewares division. I think if I had to say how I felt about them, and I were comparing them to my furniture division, right? Furniture division is, I don't think we can say that housewares is not doing as well as furniture. You know, I just would say the return is greater and it's going in the right direction, right? Their return is smaller, going in the wrong direction. You can say the margin's better, but not really. It's 4% there, or at least we're stable at 4%, and our turnover is not as good on the houseware. So, you know, if I had to do something, you know, like if I had to make a decision, we're going to have to close a division, or we're thinking about selling a division, you know, I'm not as big a fan of housewares as furniture. Of course, you can't make your decisions only on ratios. You know, there could be a lot of other things come into play, but if you were just looking at ratios, you would say, oh, furniture is better than housewares. So that's it. That's the last problem. Of course, when you take your exam, you will be able to open book and know all the formulas. So I don't think you'll have a big problem with all the ratios from this chapter. And we're not doing transfer pricing at all. So don't go on and do any transfer pricing. Okay, good luck with the final exam. Take care.